Hello everyone and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Tuesday the 25th of March. The handover that we've got from the Asian session is actually fairly positive. There's been growing potential for fresh stimulus from China in the back of the disappointing HSBC flash PMI data that's got the market speculating that China may have to act to prevent slowing growth now in the region. So stock markets have bounced higher, strongly higher actually in European trading hours. FTSE's up around a percent. The DAX up 0.75%. CAC also 0.75% higher. So it looks like the situation for the equity investors is fairly positive today. However, you've still got the geopolitical issues surrounding Russia and Crimea in the background, and the prospect of further incursions into eastern Ukraine could set off further flight to safety. The G7 met yesterday. They've basically suspended membership for Russia, and the G8 is currently on hold. Certainly, the G8 summit in the summer, which was meant to be in Sochi in Russia, is now going to be in Brussels for the G7 members. And the G7 have also said that there could be further sanctions on Russia if they push into eastern Ukraine. So as we speak at the moment, there's going to be no real escalation of this situation. So investors have taken that slightly positively. Currency traders have not really pushed on yet today. I think they're taking a little bit more cautious stance at the moment. Certainly, euro and sterling are just basically flat at the moment. Japanese yen also flat today, so no real major moves on the currency markets yet. But I think perhaps certainly sterling investors are a little bit cautious in front of the big UK inflation figure that's due to come out at 9:30. That is expected to come in at 1.7%, so down from the 1.9% last month. As you can see on this chart here, we're now below the 2% threshold or target that the Bank of England have consistently set themselves, and is also back to levels seen in 2009, so a 4-odd-year low there on inflation for the UK. So 1.7 expected today, and any undershoot of that will certainly put pressure on sterling, you'd imagine, and pull cable even lower. It's under pressure over the past few days, but certainly it's a little bit cautious in front of that number today. Other news today, you've got the consumer confidence for the States. That is at 2 o'clock GMT. And the recent figures have been fairly strong, and it looks like the number is set to come out at around about the same sort of level. 78.6 is the expectation there. And also you've got new home sales this afternoon as well. At the same time, 445,000 is the expectation there, just down from 468 last time. So the markets look fairly positively at the moment, but as I said, in front of this inflation data, currency pairs are fairly flat. My chart of the day that I'm going to be looking at is silver today. Silver has had a significant decline over the past few days, over the past week or so. It's been in a consistent downtrend, and we're now back below this 2050 pivot level that has for so long acted as a basis of support whilst it's been trading above, and a basis of resistance whilst trading below, hence being a pivot level. The breakdown below now suggests that we're in negative configuration, certainly, and it puts us at risk of a retracement back towards that 19 level. That 1897 was the key low in February. or late January. Momentum indicators continue to drift away, and you would argue that the stochastics are negative, although they are beginning to bottom out. But as you can see back in November, that situation can exist for quite a while before you get the buy signal, which is the cross back above the 20 mark. So at the moment, it's a pretty negative showing on that. On those stochastics, and also the MACD lines are back below neutral as well. So we're still suggesting that the downtrend, this is on the on the intraday chart, this downtrend is fairly solidly intact. Although in the last couple of minutes, as I've just started speaking, obviously, the silver chart has actually started to push higher, but we've still got the basis of resistance with this 55-hour moving average. Currently comes in at 2017, and I'm still thinking that any sort of bounces are a chance to sell this chart. We had a bounce a couple of days ago. That was a couple of sessions ago on Friday. And that looked to be a chance to sell, so we could be in that sort of situation again. MACD lines are below neutral, so this looks like it's probably just a dead cat bounce, potentially for further chances to sell. I'll zoom in slightly there, and you've got this band of resistance now around that 2020 mark. So I think that would be certainly a level that you could be using as a chance to sell, but certainly there is resistance around these levels where silver currently trades at. So we're still on the negative aspect on this chart here for further declines. Anyway, I wish you good luck in your trading on silver today and whatever you choose to trade, and I will speak to you later. Thank you.